Investors are going to be heavily focused on what the Fed is going to do. Fed policy meeting. It is this week, even though markets widely expecting the central bank to hold steady on rates. That's maybe not even the issue at this point. We want to get some insights on what is ahead, what's going to happen during that meeting, what that conversation is going to look like. Roger Ferguson used to sit at that table. He's the former vice chairman of the Federal Reserve, former CEO of TIAA, and a CNBC contributor. So what is going to happen at that table this week? What does that conversation even look like at this point?
Well, first, let me start with the fact that I think the market's right. There's not going to be a move this week, but it's going to be a very, very active debate, I think, around two things. One is at this stage, do they need to go further? There'll be those that say, the old models don't work anymore. We obviously are winning the battle against inflation, and the 10-year Treasury is doing some of our work, so we can just really think we're done. There'll be another set, which I think will win out, which will say it's probably too early to declare victory completely, keep the door open for a December move. And I think there'll be quite a bit of debate around what to signal. And at the end of the day, I expect the wisdom of the room will be we should keep the door open for a December hike, not knowing what the date is going to be between now and then.
And when you say, what are we going to signal, is that signal going to come this week? Meaning, do you think you're going to hear Jay Powell signal December, or it's going to be a little bit more ambiguous than that?
I think what he's going to signal is the door is still open, and they'll wait to see the data coming in. I think he's going to remind people that they have done quite a bit of work. Obviously, the markets know that the market itself has done some of the work. But I think he definitely wants to keep the possibility of a December hike at least alive. And so I think that's the signal, nothing more definitive than that. Maybe a bit ambiguous, but definitely that the possibility of another hike has not been taken off the table.
Roger, can you overlay what's happening in the Middle East on this conversation and what happens as it relates to being in the room with a Jay Powell and the rest of the governors, and talking about the market doing things for you, what the market is doing either for you or against you in this regard?
Look, I think in terms of what the market is doing, they've seen that financial conditions have tightened quite a bit because of the move on the 10-year. I think many of them believe that that has to do with supply and demand conditions, i.e. the Treasury issuing, quite a bit of debt to pay for the deficits. I think vis-a-vis the Middle East at this stage, from an economic standpoint, not a humanitarian standpoint, what it has done is again, fairly ambiguous. Oil prices at one point spiked and then have come down somewhat. There are probably some concerns about supply chain issues of things that run through Israel. But those at this stage, I think, are going to be observed as things to watch. Nothing yet exactly in terms of how it's impacted the U.S. economy. In fact, the U.S. economy has proven that it can power ahead through many, many different headwinds.
Are you surprised at where the 10-year is at this point?
I'm not totally surprised. I mean,
and we should just say we're at 4.875 for those listening at home.
Right. So I'm not totally surprised because, by definition, when the Fed is keeping the short end of the yield curve relatively high with the overnight rate that it controls, there's got to be some sort of upward slope. Otherwise, the investors get stuck with what's called negative carry. They get paid less to take the risk of a long-term 10-year versus a short-term. That's not logical. So at some point, the 10-year rate had to move higher just to accommodate the fact that the Fed itself was going to be higher for longer. Then there are other factors, supply and demand that we've talked about, has been one of them, and the fact that the U.S. economy itself has continued to show strength, and so investors expect that a higher interest rate would be called for by the market.